So what's going on today, Maria?
What
do you got?
Let's see. I guess the thing I struggle with is, in just processing loans, is calculating self-employed income, honestly. I know we can use LoanBeam, stuff like that. LoanBeam is the program that kind of calculates it with the tax returns, but what's the difference, between qualifying with self-employed income versus W-2 income? What's really the difference?
Yeah, so self-employed income is probably where borrowers and loan officers get themselves in trouble the most. I'll give an example. I had a client apply last week on my online application, and they had self-employed income, and it was, $6,800 they had a month for self-employed income. So, of course, because I always get all their paperwork, I get the guy's tax returns. And on the tax returns, there's a Schedule C. This is one form of self-employed. It's, you're just a Schedule C. It's very simple. It's on your personal tax return. It shows that he made, he brought in X amount of dollars that year, and then he had a whole bunch of deductions, and then his adjusted gross income was about $3,000 a year.
So a year?
A year.
Oh.
So the adjusted gross income is all of your money that you've made that somebody's given you, whether it's here, 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 and here, or just one company that you're 1099 with. If you're 1099 employee, you're considered self-employed. You put all that in and you say that, okay, this is everything I brought in. And then off of that, you're taking your car expenses and your business meals and if you have to pay any employees, you're taking all that off of there. And now you have a new bottom line. And that's the bottom line you're paying taxes on to the government. And that's the number we're going to use to qualify you. I always tell people you can't have your cake and eat it too. You can't not pay taxes on money that you made and also be able to use that larger amount to qualify.
So you're talking about gross income versus adjusted gross income. Got you.
So, and some people have no adjustments. They made $100,000 and their adjusted gross income is $100,000. But the majority of self-employed people have a decent amount of expenses. The second somebody tells me they're self-employed and they give me a figure of what they make, I stop right here. Let's get the tax returns and let's review them. A Schedule C is easy because it's all right there. But you have people that are, LLCs, they have business tax returns, they're part of a huge business. So we have to start looking at the business tax returns too and figuring out what's going on there. Some of the stuff that's deducted, we can actually add back in. If you do, depreciation. I know, sometimes I forget my words. Depreciation, we can add back in. So it's not as simple as just being like, yeah, this is what I make. And that, I had a conversation with the client. I got back on the phone with the client and I explained all this to him. And, of course he was upset because now he no longer qualified. But at the same time, he was like, all right, well, now I know.
Right.
So I'll plan things a little bit differently in the future. He's like, we had a whole conversation. You have to file your tax returns as they are. You can't lie to the government.
You can.
But you can. You can, but you shouldn't.
Right.
And I can't advise somebody to do that. And I can't tell you how to file your tax returns. But at least this person knows, when he files his taxes, maybe he'll do a few less deductions.
Right.
There's nothing wrong with paying more taxes to the government. That government's fine with that. And maybe set himself up a little bit better to be able to get a mortgage. But it's always tricky with self-employed. If you've been self-employed for less than 5 years, we do a 2-year average.
Okay.
So let's say last year you just started your business in January of 2021 and you made $40,000. Your adjusted gross income in 2021 was $40,000. But in 2022, all of a sudden you're making a ton of money and now you made $100,000. Well, we're averaging those 2 years.
Right.
So now you're at, 14, you're at $70,000 a year.
Right.
Not, in your head you're thinking I'm at $100,000, I'm at $100,000. And now we're halfway through this year. And this year you're making $300,000. So you're like, I'm making $300,000. But you're not. We're looking at 21, 22 average.
Okay, so we don't take the year-to-date.
We don't.
This year. Okay.
We don't. The only thing we do with the year-to-date is we just make sure you're on trend
Gotcha.
to keep making what you've been making.
Or more. It doesn't matter.
Correct. It doesn't matter as long as you're not going down. So let's say 2021 was a $200,000 year and 2022 was a $50,000 year. We don't do a 2-year average now. We're just looking at 2022.
So when the second year is less, it doesn't have to be significantly less. It could be any amount less. Yeah. We're not doing an average. We're taking the year that's less.
That year.
Divided that by
12,
just 12. Okay.
To come up with your monthly. Yeah.
Okay.
Yeah. So it does get a little tricky, and I take everything to heart. I feel bad, because somebody's like, but I make a whole lot of money. You do, but you had all these
You do, but you don't.
deductions. Yeah.
Right.
Right.
You make enough to survive, but not necessarily to qualify to buy a house.
Right.
Unfortunately.
Right. Yeah. But, hopefully with the conversation, again, this goes back to getting that early pre-approval. With a self-employed person, it might be a really early pre-approval or, a really early conversation because it might take them 2 years to get the income to where it needs to be. But at least this way they know I have to call. At least this way they can have a plan.
So speaking of, I have a person who will remain unnamed, but she also owns a small business, and they weren't always showing how much they were making. A lot of the money came in as cash or as tips.
Yeah.
And although they made a significant amount of money, they didn't show it. So there was nothing I could do for her for the tax returns.
Yep, exactly.
Because it helps in some ways to not claim everything.
Right.
But where it totally kills it is
buying a house,
qualifying for a mortgage. Like, there's just no way around it, unfortunately.
There's no way around it. I mean, we have alternative programs now.
Right.
We have bank statement programs.
What is that?
So a bank statement program basically was going to review your business bank statements for either 12 or 24 months, depending on your scenario, would dictate which one we went with. And we're just looking at your deposits into those accounts every month. And whatever you deposit, there's a formula that we use, and that is considered your monthly income. One of my favorite phrases is there's no free lunch. You can use one of these programs, but you're going to pay a higher interest rate for it. So, if you really want to buy that house, we can always look at this option. You have to have been self-employed for at least 2 years. There's a couple programs that'll do in 2 years. The majority of them want you self-employed for 5 years. They don't want you to just wake up today and be like, oh, I can't qualify for a mortgage the regular way. Oh, okay, I'm going to do a bank statement program. It has to make sense. There's somebody who's going to fit into the program. It's not for everybody, but it's for that person who maybe works on a cash basis for whatever reason. In those situations, we don't want to see the tax returns. We just want to see the bank statements. Going back, if you've been self-employed for more than 5 years on the regular programs.
Sorry. Okay. All of our bodily functions are really messing us up today.
Yeah. Editing is going to be a nightmare.
Yeah, sorry.
Get every 6 hours. It's a sneeze.
Here's another one. Here we go.
The whole section. So, more than 5 years self-employed, we typically only need 1 year tax return, which is kind of cool. So say you're that person who made very little last year, and then 2022 was an amazing year. We're just going to use 2022.
That's for a bank statement.
That's for
I'm sorry.
Nope, the regular tax. We're looking at tax returns. A regular program.
But that's only if you've been self-employed for 5 years.
More than 5 years.
Oh,
5 years or more. Yeah. So
that's great.
It's kind of a neat little thing.
Yeah.
Yeah. But you have to show that you've been self-employed for more than 5 years. Usually business license, something like that. But self-employed is always a little bit tricky, and I always cringe. This person that I spoke to last week had a pre-approval letter from another lender. And the agent was smart enough, and she's like, hey, can you take a peek at this? And absolutely. And, she would have gone under contract with this client, and he can't get a mortgage. He's not even close to getting a mortgage. So
this speaks a lot to the importance of a qualified, knowledgeable loan officer.
Yeah.
A lot of people got into the business during the COVID boom or whatever because they wanted to make a quick buck, but they have no idea what they're doing.
Know. Correct. And it's not going to help anybody.
Cut that up.
No, you know what you're doing.
Oh.
Yeah, it's not going to help anybody. They're not going to close a loan. The real estate agent isn't going to sell a house, and the buyer is not going to buy a house. So what have you done to help anybody? Nothing.
Yeah.
You've ruined your reputation with the real estate agent, and you have a very upset client. And at the end
on
of the
both
day,
sides, right? The seller's upset, the buyer's upset.
Right. So, unfortunately, I think it comes down to laziness. People don't want to do the homework. They don't want to ask for the paperwork. The client wants a quick pre-approval, so they'll just jump on a quick online app or something like that, and it spits out a letter. But agents need to be aware.
Yeah, I agree. It's a combination. It's either laziness and or lack of knowledge,
Yeah.
or
Yeah.
like you said, laziness in terms of not wanting to explore or ask. They don't want to look stupid, so they're not asking him the question.
Yeah.
There's no stupid questions.
Yeah, well, as soon as the guy was saying, well, I have to dig out my tax returns, I knew immediately he hadn't given them to the other lender.
Wow.
And I said that to the agent. I'm like, you need to proceed with caution. I said, I can't give you any of his personal information. I said, I just don't believe the other lender has reviewed any of the tax returns yet. And I haven't, at that point, I hadn't reviewed them yet either, so I didn't know where he was. But, lo and behold, there was not $6,000 for the self-employed income.
I had a borrower the other day ask on a pre-approval. They wanted to know what they would qualify at, like incremental purchase prices.
Yep.
And when I sent them the payment breakdowns, they had seen that taxes and insurance didn't change, although the payment changed, obviously, because the higher the purchase price,
right.
Obviously, the more the payments increase.
Yep.
They didn't realize that taxes don't increase.
Right. Right. Just because you offer more on a house.
Right,
Yeah.
Exactly. Like
Yeah.
if you want to buy a house at $600, but you want to offer $700, that doesn't
Right.
mean the taxes go up
Correct.
by
Correct.
$100 or whatever.
Right.
That being said, I did let them know, no, your payment's not going to change. The HOI, homeowners insurance, is going to depend on what you're insuring.
Right. Right.
So that's just, I can only give you an estimate at this point.
Yep.
All that being said, if anything changes with the HOI policy or if anything changes with taxes, how does that affect their payment?
Yeah. So yeah, absolutely. I mean, it directly will affect their payment, and the homeowners insurance is a big one, because I'm assuming this is in every state, but each town is rated differently as far as insurance goes. You may be in one town where a $300,000 house is only going to cost you $80 a month, and then you put that same house near the ocean, and now you have all these additional coverages that you need, including flood insurance. So it's going to go up just, even if it's the same price house, one town to another, just due to location. Unfortunately, I believe crime plays a part in that. If you're close to a fire station, close to a fire hydrant, all that is going to affect your insurance. So we don't know that when we're, giving them an estimate. We pick whatever figure we want out of the air for.
We try to
number.
be good
Right.
about it, right?
Yeah, we try to look at
overestimate.
We look at the purchase price and we kind of do an estimate. If it's a 2-family house, they're going to rent out one of the units, so you need additional insurances that way. So we go even higher on a multifamily unit, but that will definitely change it. When the houses get reassessed in July, your taxes are going to change. So if we close somebody in, if we run numbers for somebody in June, and they're not closing until August, and all of a sudden the reassessment comes out, and now the taxes are higher than what everybody had been estimating. Now that's going to affect their payment that way. And these are things there's nothing we can do.
They're out of
about
our
it.
control, right?
Yeah.
It might affect somebody's ability to qualify.
It might.
If it goes up significantly.
It might.
Right?
It absolutely might.
Yeah.
We have a lot of first-time home buyers. This that are just barely qualifying. It's so hard nowadays with prices up so high,
Right.
And rates being a little challenging right now. These people are just getting by. So it's really important. I mean, on the insurance part, I always push people to immediately get an estimate.
Yeah.
Let's call somebody. I can connect you with somebody right now. I have a couple excellent referrals that I can give you. Let's get this number so we know right now if this is going to be a problem or not. If we need to make some adjustments on this, need to put a little bit more down, pay points, bring the rate down, something like that. But all those things are so important. And I'll tell you about a phone call I got the other day. It actually wasn't even a client of mine. It was a real estate agent that I do some business with. And she got a call from, I think it was a friend of hers. And the person was so distraught because their mortgage payment, they closed, I don't know, maybe a year and a half ago. And their mortgage payment had gone up, and then their mortgage payment had gone down. And they were like,
yeah.
What really concerned me is the client thought at that point they had a variable rate, and they wanted to refinance their mortgage.
Interesting.
So they're like, okay, can we talk about refinancing? I'm like, we can. I said, but let's just talk about the situation first. Let's see what's going on. Like, what happened? Like, well, about 6 months ago, we got a letter saying our mortgage payment was going to change because the taxes were adjusted incorrectly. I'm like, you don't need to refinance. I'm like, this is an escrow account situation. Like, for whatever reason, and I don't know what it is, you send me what you got in the mail, I'll take a peek at it. I said, but for whatever reason, your taxes were overestimated at the time of closing. So when your attorney told the lender what your monthly taxes are, they gave a figure that was too much. And it just could have been that taxes came down in the meantime. Who knows? So the bank every month was collecting X amount to pay what they thought the tax bill was. When the tax bill came out in January, the taxes actually were that amount less, say $500.
Oh, wow.
So they had to pay a smaller amount. So now they have this reserve in your escrow account, and these, I don't know if you know, but these accounts are highly regulated by the government. At the lowest point throughout the year, you cannot have more than a 2-month cushion in it. Even if you have a penny, the bank has to refund that money back to you. So this is what happened with them. There was too much money in that escrow account. So they're like, okay, here's the extra money. We're sending it back. And in the meantime, we have to adjust your payment so that we don't have too much money again next bill, in 6 months when the next tax bill. So they adjusted the payment down. Well, something happened again, and the taxes went back up again.
Oh.
I think I know what went on. So then they had to readjust again. But this often happens. It's always going to happen. Your taxes are going to change.
Right.
Your taxes are never going to stay the same. And your homeowner's insurance is going to change. So every year, your lender is required by law to send you what's called an escrow analysis. On that escrow analysis, it shows everything you paid in and everything that got paid out of that escrow analysis. And again, if you're more than a 2-month cushion in there, they have to refund you. If they didn't have enough, they're going to adjust your payment to make those payments timely and in the amount that's due.
Okay.
So it's required.
But they'll always let them know.
Tell you
the
what's going
borrower.
on.
Yeah.
Yeah.
They'll
Yeah.
always be aware. It's not
Yep.
just going to randomly go up 1 month.
Correct. And you can always, I always tell people, go online to the tax office in your town.
Yeah.
See what's going on with your
Pull
bill.
a tax bill.
Yeah, see why it went up.
A lot of people don't know that they can pull their own tax bill.
Almost every town in
Yeah.
Connecticut is online at this point. I always zip on there before.
Wallingford is the only one that's really hard to pull for some
Wallingford's
reason.
a
It's
little.
like impossible.
Yep, you're absolutely correct. In Milford, you can't pull by the address. You have to have
Right.
like a parcel number or something like that.
No, Milford, you can. It's just
Anyway, yeah.
Sorry, it's like, nobody wants to know this.
But these are important things. I mean, this is somebody.
It's like really interesting for
Yes.
us.
Let's just say this person had called up, some online lender.
Yeah.
And this person legit thought he had to refinance because he thought he had an ARM product.
Wow.
Some
Imagine
online lender would have been like, yep, let's do this. Let's refinance.
Sure,
Make
take
some
advantage.
money off of them.
Well, I know a company that likes to refinance for no
Yeah.
reason.
I do too.
Yeah.
Yeah, and it's sad. And, these are just conversations. I love having these conversations with people. At the end of the day, it's helping somebody. It's not giving us business.
Right.
But it's not always about business. It's about
Exactly.
helping
No,
people.
I
So
agree.
the guy, he was so appreciative. He was so cute. He's like, oh my God. He's like, what can I do for you? I'm like, you know what?
Give me
Don't worry
money.
about it. I'm like, if any of your family or friends want a mortgage, I'm like, hold on to
Yeah.
my phone number and send them over to
That's
me. I'm
great.
like, I'll take care of them. And, that's what this is about.
I agree.
Yeah.
I agree.
Yeah.
We're like therapists, money therapists.
We are.
Yeah.
Yeah.
Aw.
Yeah.
Oh, I love that.
Yeah.
What else can we talk about?
Let's talk about you.
I love your shoes, by the way. I have red ones like that.
Thank you. Yes,
I
I
love
know. I
that.
love them.
I love. Oh yeah, I love the chunky heel.
Yeah, me
Chunky.
too. They're comfy.
Chunky.
They're comfy like Crocs.
Yeah. Oh god.
Nice.